Good morning, everyone. And on behalf of the entire IIMA Ventures team, a very warm welcome to all of you to the Bharat Inclusion Summit. As Shailja and Riva said, we've curated a very packed and interesting day ahead for you. But before we start, I would want to take a few minutes of your time to introduce you to IIMA Ventures and the Bharat Inclusion Initiative platform set up by us. So built at IIM Ahmedabad, IIMA Ventures is one of India's oldest and most prominent entrepreneurship centers and early stage technology investment platforms. We work with bold and visionary founders in their 0 to 1 journeys. And when the risks are high, the ideas are raw, and the potential is limitless. To these early stage enterprises, we equip them with what we call the 4 C's for success: catalytic capital, customized mentoring and coaching, a strategic connects, and a strong community of founders that helps them build and validate their models and lays very strong foundations for scale, for impact and high growth. When we started, our mission was to find and plug gaps in India's innovation and entrepreneurial landscape, especially in sectors and geographies where there are market failures and private sector support is not easy to find. In pursuit of that mission, we published entrepreneurship bestsellers. Many of you here would have heard of Stay Hungry, Stay Foolish, and more recently, the Startup Compass. We launched the country's first accelerator programs across a variety of sectors: information and communication technology, financial services, healthcare, food and agriculture, sustainability, mobility, and themes like people and culture, venture investing, growth hacking, to name a few. We were amongst the earliest seed investors in tough tech and frontier tech in the country, and the first academic incubator to set up dedicated venture funds for climate, digital inclusion, and deep tech. In 2018, after about a decade of catalyzing tough spaces at IIMA Ventures, we decided to set up the Bharat Inclusion Initiative as a platform to solve the tough problem of financial inclusion in the country. We took a continuum approach to do this. We started with research and knowledge building to bring back deep insights on the unique Bharat customer, insights that were grounded in data and not just anecdotal information. We set up customized incubation and acceleration programs to channelize these insights into entrepreneurial solutions. We set up impact funds and grant capital to support these enterprises with their field testing, prototyping, and the like. In the 5 years between 2018 and 2023, we supported over 60 startups that were building more than 35 plus very novel Bharat-centric use cases. Like you heard, startups supported by the program are reaching more than 35 million customers in the Bharat segment, and they have cumulatively raised over $160 million in follow-on funding. In the last few years, as a nation, we've made tremendous strides in enhancing access to financial services for the Bharat customer. Due to a confluence of, we all know, the right technology, the right policy, a very robust digital public infrastructure. But that said, there is still a large segment, of this population which is still underserved, largely we feel because of usage-related gaps. The goal of financial inclusion will be fully realized not only because of government push, but also because of market pull. And we strongly believe that the shift from access to usage will come with deep innovation in design and distribution that keeps not only the customer, adoption by the Bharat customer in the center, but more importantly, impact and well-being of the customer. And therefore, in this phase of the program, we are deeply focused on driving deeper usage of relevant financial products and services by the Bharat customer, as well as catalyzing dignified livelihood and income enhancement opportunities that will enhance the financial resilience of the Bharat customer, especially women who have been chronically underserved. We've been very fortunate to have partners like-minded, very passionate from day zero, perhaps even before that, in the form of Pawan from the Gates Foundation, Maneesha of JP Morgan Chase, and Prachi from the Michael and Susan Dell Foundation. They have been partners in crime. They've asked us tough questions. They've kept us honest. They've been both our sounding board as well as our shoulders to cry on. I would love to have them share their vision for the sector and what lies ahead. Pawan, may I request you to please come up?
Hi everyone, good morning. It's really exciting to be in a room full of entrepreneurs who have the ability to change the way we see the world and the way it can be delivered, for specifically helping most of the people who, what we believe, are vulnerable, but they have complex financial lives. And the reason why we are here is, and why we got interested in this, is that our mission is to ensure that every person has an opportunity to live a healthy and a productive life. And there are lots of you know, of barriers in the lives of people, which kind of restrict them or constrain them from actually trying to reach their full potential. And a lot of people in this room, including myself, in our early years, were not even know of the real issues or problems that we saw on the ground eventually. But I think, as Priyanka said, the phase one of the inclusion initiative, which started way back in 2018. That was a launch in 2018, but the work started in 2017. It took us a year to design the program. A lot of conversations, a lot of debates. People pulled out their hairs. I still have mine, luckily. But there was a lot of conversation and debate on what should be done, how should be there, multiplicity of partners, a lot of things to do. A lot of challenges, right? And we were trying to serve a segment which the VCs were not traditionally interested in serving, right? Because the role of the VCs was, let's try and do something quick, innovative, which can scale very quickly and get us a large number of customers, right? Which is great for them, but our segment was slightly different. There was a higher gestation. It needed a lot more support. It needed a lot more effort to get into this. And I must say that the team from IIMA Ventures has been open in listening to our feedback, have been trying to address some of the crazy ideas that we've all had, and we've pushed them really hard to try and change. And I'll tell you, there are a few things that I've learned from the engagement, both at IIMA Ventures as well as the startup founders over the years, as I've gone and said. I think the first one is to deeply understand the community that you're trying to serve. That's really, really important. And you'll hear that from Professor Abhiman as well, when we started off that other research thing in rural transformation and why that was important. But I think that's very critical, because till the time you don't understand what problem you're trying to solve, you're unlikely to be successful in doing that, because you don't understand where the shoe pinches, right? The other question is that we often have a debate, if we talk of affordability, will there be a compromise on quality, right? And I think we all need to strive, as we serve that segment, that we have to aim for affordability without compromise. And that's where the role of technology comes in, is because it can do things for you which otherwise would be very, very expensive to do. As an example, let's take off the ID industry and KYC by using an Aadhaar. In the pre-ID days, the cost of KYC for one individual for opening a bank account, only KYC, was about $10. Right? At that point of time, it'd be very, very difficult for the industry to serve this segment as we talk about. With UIDI coming in, it solved the issue by saying that the cost now is about 10 cents to about 20 cents. That suddenly opened up the floodgates, right? And that's what has led to a lot of acceleration in the uptake of that. Along with that, what happened was the role of the regulator, which was far more dynamic, which allowed these changes to happen with the guardrails in place. I think that's really, really important. So we must not ignore that fact that you can build, affordability without compromise, right? The third thing we learned was, and we pushed for, was scalability and sustainability. What we realized was that a lot of fintech said, let me go and demonstrate this to say that it works. And we realized after that was done, the pathway to scale was almost, ambiguous. So we said, can we build scale as a design element? Right up front, when you're designing a product, can you build for scale then? And test what you think can be scaled, instead of trying to scale after you've gone and built it. I think that became the other lever that we had. The other thing which we found was that a lot of startups struggled on distribution, right? Because you've gone and created a product. It's a 5-member team. It's a 7-member team who's worked very hard on technology, on the product, and distribution is not their forte, right? So the key learning was, can they leverage other local networks and work with them and collaborate with them to do stuff? Right? I think the other thing which I learned, which was really, really good, was that adopting simple but high impact innovation was the key. For our segment and our markets, the products have to be very simple to understand, very, very simple to engage with, really simple to use as well. But the impact has to be high, right? So the thing we learned was, keep all the complexity at the back end, and in the front end, keep it as simple as you can. There's an old adage says, KISS, right? Keep it, it's simple, stupid, which actually fit the bill really well, because that's exactly helped, like, what was told by Priyanka a bit earlier. Serving 30-40 million odd customers by about 80 startups in that thing is not an easy thing to do, right? I think the key piece after all that is done is, which we often tend to forget, is to identify the impact that your work is happening on the people. There has to be an element of how your work is changing lives, because then that becomes a driver for you and your organization and the rest of the ecosystem to do more to help that segment. And I'm so happy to say that now when I'm in the field and I see people operating a phone and doing stuff on their own, and where we thought that they did have challenges, I think we need to change from a paternalistic approach to say, we know what will work for them, to identify with them what works for them. I think that's a big change that I've seen, and I hope to continue to also see this. And I'm not going to take away all the time from Maneesha and Prachi, because then they'll kill me that you said everything. I don't have anything else to say. So I'm going to now just stay quiet. Thank you so much for being here, and I'm just glad that I'm here. And all the best to all of you. I hope to interact with you, not a lot of you today, but at least a few of you, to understand what else you want to do and how we can help, and move this thing. And IIMA Ventures, thanks for the partnership. Thank you.
Thank you so much. It's a delight to see this second edition. It was pretty much the same group on the first, but the group on the other side of the stage has definitely increased, which is always great when we do a summit which involves collaboration, learning, and a lot of the other things that Shaila just said. It's also very easy to follow Pawan, because I can literally just say ditto and walk off. And I was threatening him I would do that, but that's actually very special. If you think about it, is 3 large organizations which literally came to the table with the same desire for change. That is rare. And even rarer was to have IIMA Ventures, in one of its earlier avatars back then, be able to keep these 3 people on the table, engaged, and develop a solution. And Pawan gave you the sanitized version of the initial conversations. They were far more interesting than that. We often get asked as JP Morgan Chase, why are you interested in inclusive finance? Which kind of seems a bit of a funny question to me, because if you're one of the largest banks in the world, finance is kind of core to what we do at all levels. But fundamentally, in a country like India, as well as other countries outside of the US, where we are a wholesale bank, as is commonly known, or a merchant bank, why do we get into what is essentially considered a retail space, right? So retail at pretty much the bottom of the quintessential pyramid as it is. So at JP Morgan Chase, we fundamentally believe that for economic growth, in any country to be sustainable, to be stable, to be long-term, there needs to be participation of all citizens in the country, of all those in the country. So economic growth needs to work for all. And for it to work for all, it needs to be inclusive. And that, ladies and gentlemen, is just the reason why we do what we do. For economic growth to work, you need to have strong and stable financial systems which are also inclusive. Therein comes an initiative like the Bharat Inclusion Initiative, within that, the Financial Inclusion Lab and such. So one of the things that we've been thinking about a lot since this started about 2018, so it's been about 5 years. Where are we headed? Where is this space headed? And that's what I'd really like to share with you in terms of what we're thinking about the direction. So we've already started with the cohort of the first, I think it was about 45 or 50 inclusive fintechs that were supported under the Financial Inclusion Lab, taking them to market. And that really means strategic collaborations with banks. And I'm delighted to hear there are a lot of banks in the room today, which is quite a change from 2 years ago. Investors, and it's a chicken and egg, right? If you don't collaborate with banks, you're not going to scale. Investors are not going to be interested in you. Banks tell you that you're not scalable, so how do we collaborate with you? Not easy, and that's why you have IIMA Ventures here to support you through this journey. But essentially, it needs to go to market. It needs to get adopted. It needs to go to scale. It needs to make all of us sitting on this stage redundant. It needs to become business as usual. And if that happens, then we've all succeeded and we can pat ourselves on the back. But on this journey, and particularly given the population groups that all of us focus on, there are two things which are coming up increasingly across the world, and certainly so in India as well. Customer experience and customer protection. And customer protection, we hear a lot more, right? So Sugandh is here. She's just given us the good news. They become an SRO. You can catch her to learn more what that means. But customer protection, while common, while intuitive, while very core to India's banking DNA, customer protection has always been there. Protecting the small depositor has always been the focus. Customer experience is something that we're kind of shuttling out. We're not prioritizing it. But think about this. As not necessarily a customer of inclusive finance, each one of us chooses what product to use, what technology to interface with, how to interface, which banker, based on what? Based on what we perceive as a valuable experience. And that same needs to be translated to all customers of the startups who are in this room. Every customer needs to be able to have an experience that they cherish, they stay loyal, they grow, and they are able to help you grow in the process. So those are the two things I would say as a takeaway: customer experience and customer protection being the next frontier for inclusive fintechs. And from our perspective, in terms of what does it mean for the customer, we started out by saying financial inclusion or access to a bank account. India has been stellar on that front. I don't think I need to tell the audience about all the numbers there. Then we said usage. How do we get them to use more products, make it affordable, make it accessible? Now, I think the conversation globally is all great. How do you use financial services, particularly for those who are disadvantaged, underserved, left out, to build financial resilience? So this isn't just about access, inclusion, affordability anymore. It's about all of it coming together to be able to make that customer resilient in times of a crisis. And we've learned the hard way a few years ago. How do we make sure that small businesses don't shut down when a crisis occurs? How do we make sure that farmers don't have to throw their crops when a crisis occurs? If we achieve that, then the financial system has truly made the economy work for everyone. Thank you so much.
Hi, everyone. Welcome again to this wonderful summit. It's such a joy to see so many of you in there and all the enthusiasm and the buzz which was happening in the corridors. It's hard to imagine, Priyanka, like in 2018 when we started, what we started with, and you know what we've created over the years, but more importantly, this spirit which exists in this group and many of those companies which are represented outside in the company showcase is really what we feel proud about, and it's really what, you know, the inclusion is all about. Many of us trying to solve this problem in a collective way and keep chipping at this problem till we get there. And in fact, even that is not enough, because as Pawan said, we keep shifting the goalpost. So, you know, this is what we started to solve with. Okay, now this is, you know, this is done. Let's move to the next, and let's move to the next. And in many ways, IIMA Ventures and the Bharat Inclusion Initiative actually represents that for us. I'll try to change the frame a little bit from financial inclusion and bring it to the work that the foundation does, and bring it back to the topic of financial inclusion by coming to what are we all chasing with financial inclusion. When we look at our foundation and we talk about our mission, especially in India, at the Michael and Susan Dell Foundation, we are building pathways for more than 30 million children and communities and families to access opportunities in India's growing economy. And that will happen through education, that will happen through jobs, and that will happen through access to financial services. The way all of these fit together for us, we look upon them as 4 different levers which are working. The first one is education. We advance quality education in government schools, in a lot of public education systems of India, to get children to start performing at their grade level outcomes. We think it's a very core part of what our country needs and is the bare minimum that children should be getting from the primary education system. But at the same time, we've expanded our work to think about what do young people and children need in terms of their school to work transition? What happens to them in senior grades? What is that connection from what they're learning to school to the world of work? What is that entrepreneurial mindset that our children should be developing? What career choices are they making, and where are we lacking? So that's one core part of what we do, and you know, there is a lot of programming and a lot of programs that we fund in that area. When it comes to our youth who are studying in college, even though we don't have a very glorious GER to talk about, we are probably the most lacking in all growing economies with a 27% gross enrollment ratios. But what's critical over there is that are we building those career pathways for students who actually made that hard choice? Because when you come from a socially and economically underprivileged background, it's a hard choice that you're making to stay away from the workforce and actually studying in college. Our graduate unemployment rates in India are actually 40% higher than graduates who do not, like people who don't have degrees. So the second core part of our work is ensuring that college actually leads to career pathways of choice for those who've gone to college, and which means not just about thinking through what they get in terms of academic outcomes from colleges, but are they getting all the wraparound support that they need in order to be able to get into a career of their choice. And there are many who will not make that choice, and that's where a lot of our job work sits. There are many who would actually go to our ITI ecosystem or will choose to not go to any formal education beyond grade 10 or grade 12. And what are the opportunities for them? India today is buzzing with opportunities. Many of you are enabling those skilling or those livelihood opportunities for youth. But are we building that in a way that it actually leads to a progressive career pathway versus a job today? So a lot of work that we are doing in that area is about careers in demand-driven industries which are growing, and careers which are actually providing them a pathway for growth versus a job here and now today, which may or may not exist in some period of time, or actually may not ever give them that economic progression that all of us desire for ourselves when we are living in a country which is growing at the rate at which India is growing. And our approach over there is very much to scale and sustain, ensure that young people are prepared for not just their success here and now, but for their long-term success in growing industries. And we've invested in a lot of skilling programs, but also invested in a lot of gig platforms, and increasingly in a lot of job tech in that. And finally, I think it comes to this question that we all keep talking about, which is India needs 9 million jobs for its young people, 9 million non-farming jobs for its population. Of course, they're not coming from anywhere. So India is and will largely remain to be an entrepreneurial economy. It will be driven by myriad small businesses, and they are the ones who will not just create the financial success for themselves, their families, their communities, but by the people they employ and how they grow in the ecosystem. And that's where all of this work, from education, entrepreneurial mindsets, what we do in colleges and what we do outside of colleges in jobs, kind of comes together for it. And we look upon our role as, can we actually catalyze that small business growth? So at Michael and Susan Dell Foundation, we have almost an exclusive focus on enabling credit directly and indirectly in the enabling ecosystem for what we call the nano entrepreneurs, which are largely getting left out as we are growing this. And that's where the meaning of financial inclusion for us is a little bit broader than just ensuring that you have access to financial services, because it has to meet all of our aspirations. It has to meet us where we are, irrespective of whether I'm a student entrepreneur, I'm a college grad entrepreneur, or I actually decided to do this much later in life. And I am Ahmedabad, and BII has spent a great deal of time just figuring that out and creating this ecosystem of entrepreneurs who will actually just keep meeting the aspirations of our young people and our youth as they enter the world of work. I was also asked to share some of our advice and learnings. I mean, there can be none in a room full of entrepreneurs. We learn more from you and what you do every day at almost your expense to understand where this will go. But I will say the same things that both Maneesha and Pawan said, that there is simply no substitute to knowing your customer. It's the most critical part of any venture at any stage, any business at any stage. If I were to sift at we've invested in 65 plus companies over the years, and if I were to look at the ones which went on to become hugely successful to others, I think one common factor in the big successes I'll lay out is they always remained true to the customers. They remained true to the purpose of their businesses, and they really knew their customers. I know of companies where for every board meeting, half a day, they would ask the board to go out, see the customers, meet the customers, and then come to the board meeting and earn that seat on the table, versus just coming in and directly flying in, where the top management teams were spending, irrespective of what their AUMs at that point of time were, where the top management teams were spending more time in the field than they were in the boardrooms. So there is just no substitute to it. I'm sure all of you are doing. It's very core to the way BII develops the programs. And I think that's something I hope that all of you will keep with you as your programs grow. And the second thing I'll say is that we should never undermine the problem that we've all taken upon to solve. It's a tough problem, and that's why you're solving it. There are good reasons why commercial capital stays away from this. The chances of success over here are smaller because the problems are tougher. Let's be honest about it. But you signed up for it, and don't forget what you signed up for. The journey ahead will be tough, but how will it be solved if the toughest don't gather to solve it? So all the best to you and what you will collectively achieve through your ventures. Thank you so much.